Hey, what is going on everyone? Welcome back to another YouTube video. In this video, I want to go over some technical analysis, specifically top-down analysis, where you start from the daily time frame and work your way down each time frame until you get to your trading time frame. The purpose of this analysis is to gain the bigger picture, seeing the perspective of if we are trending on the daily, have we broken significant price levels, are we ranging, consolidating, anything like that. When you gain that bigger time frame perspective, it really helps in your analysis, especially if you are a day trader. Before we get on with the video, I just want to give a quick shout out to all my YouTube subscribers. Thank you guys so much. I really appreciate you guys checking out my content. It means a lot. I'm glad you are finding value in it. So if you want me to cover any topics, I did put an Instagram post up asking all my Instagram followers what they want to see more of. I'll put the picture here, but pretty much I'm going to cover all these topics in 2021 plus more. I'm going to start delivering some real informational stuff about trading, technical analysis, and just my day-to-day life. So get excited for that. Make sure you are subscribed to my YouTube channel. If you like my content, please hit the thumbs up button and don't forget to hit that bell icon so you get notified when I release my new videos. So just quickly covering what top-down analysis is. So as I just briefly touched on it before, it is starting on the daily time frame. You can start even higher, but for this example and what I personally do is I start on the daily time frame and I look for any significant levels, support or resistance, or any impulse moves that's happened on the daily. Using the daily chart, obviously you have more price data in each candle. You have a full 24 hours. So that is using the daily, it's more significant. I'll weigh that more into my analysis. So if I can find the trend on the daily, if I come down to the 4 hour, which is my next time frame I used when I drop down from the daily, I go to the 4 hour. So let's say the daily is bullish. If I drop down to the 4 hour, if I can match that confluence and the 4 hour is bullish as well, that gives me more confidence that we're in a strong uptrend. So from the 4 hour, I'll drop down to the 1 hour. Once again, I'll match the confluence with the daily and the 4 hour. If the 1 hour is bullish, if it's long bias, then that just adds more confluence. And then what I'll do is I'll drop down to my 15-minute trading time frame. So I trade off the 15-minute chart. If that 15-minute chart confluence the 1 hour, 4 hour, and daily, then I'm very long bias. It gives me confidence in trading in that direction because that's where the overall market, all the time frames are trading. So having that analysis on your side, having that confidence to know that, hey, the daily, the 4 hour, and the 1 hour are long bias, I'm going to jump down to my trading time frame and see if I can find any setups that present going long. So being more of a day trader, going from the daily to the 15-minute chart, when you're on the 15-minute and you find that overall trend, that long bias, I'm using as an example, really gives you confidence, and you can find really high probability trade setups from doing this type of analysis. So without going on too much, let's jump into the charts and I'll show you some examples of how I put together and do this type of analysis, this top-down analysis. And I'm also going to add in EMAs and an indicator called the TDI, which is a Trader's Dynamic Index. And this is going to help give us our directional bias and find out which way the market is trading. So let's jump into the charts and we'll find some examples. All right, so I've got a chart of GBP USD open and I'm going to take you through exactly how I do my top-down analysis and how I approach the charts every day. Now, with ASFX, we start on the 15-minute chart to find perfect EMAs, trending EMAs, which are in full trend, and we try and find perfect L50, which is this yellow line that crosses here. That yellow line is the liquid 50 or L50 as we call it in ASFX. And what that does is it tells us market sentiment, which way the market is trading. I'm going to take you through and we're going to build confidence and we're going to get a directional bias that gives us so much more confidence in taking, in this example, taking a long position on GBP USD. What we can do is we're going to start going on our higher time frames and we're going to start building that confluence in getting our directional bias. As I was saying before, we start on the 15-minute, and as you can see, EMAs could be a little bit better because we have this 200 EMA, which is that white line coming straight through price action. I would like to see that more or less coming just above the 800. If you look at the 8 EMA, which is the yellow line, the red EMA, which is the 21, and the blue EMA, which is the 50 EMA, they are fanning out quite nicely, and the 800 is on the bottom, which is good. In terms of trending, they are in the correct order. So the 8 on top, the 21 below the 8, the 50 below the 21, the 200 below the 50, and the 800 below the 200. That is a full trending market on the 15 minute. Now what I want to do is go into the higher time frames and see if higher time frames complement the 15-minute chart. Let's jump up to the daily chart. And then let's just do some simple analysis. Now, with price action, yes, I still do use price action in my analysis, finding support and resistance on the daily because it is much more significant price data. Because as I was saying before, each daily candle is 24 hours worth of data. So I weigh it more into my analysis. So if there is a zone that sticks out to me, I'll mark it up, but I'll never avoid a trade if everything is in confluence and a trade setup presents, only if I can get good, decent risk to reward to that resistance or support level. So in this example on GBP USD, you can see that we're very long bias on the daily. So on the 15 minute, we're looking for long. We jump up to the daily and then we're gonna start doing the exact same analysis we did on the 15-minute chart on the daily to build our directional bias. As you can see, EMAs are fanning out quite nicely. The only thing different is you got the 8 EMA, 20, 50 EMA, but the 800 is above the 200. So I do sometimes take all of the EMAs into account, but I'm mainly looking at the 8, 21, and 50 on the higher time frames. So this is obviously in a bullish trend. You can see price has definitely moving upwards. And then if you jump down and look at the TDI indicator, which is Traders Dynamic Index, as I was just saying before, you can see that this yellow line, the liquid 50, is above the 50 value, which means it's in the buy zone. So that just signals to me that market sentiment is long bias and price is moving upwards. It's bullish. So daily complements the 15 minute. And now if we jump down to the 4 hour, once again, you can see that price is moving up. We got EMAs in a full uptrend. So you've got the 800 on the bottom, 200 above the 800, 50, and then you can see the 21 and 8 are fanning out quite nicely. So all I'm doing is the exact same analysis on every single time frame, only the daily, the 4 hour, and we'll get to the 1 hour in a minute. I'm not overcomplicating it. I'm looking for the exact same things on every single time frame and just matching it to my 15-minute long bias. If everything complements that 15-minute, then it's just going to give me that extra confidence to know that hey, price is bullish, it's building momentum to the upside, and all these different variables and parameters are telling me price is going to go higher. So if I do see a setup present, I'm going to pull the trigger on that long ID, because more likely than not, when you have all these higher time frames complementing your 15-minute trend, price will go in that direction. And doing this analysis is the exact same for a bearish trend. You're just looking for the inverse of what I'm saying. As you can see on the 4 hour, same thing, trending EMAs. And if you look at the TDI, that L50 is above the 50 value in the buy zone. So market is moving up. Now we jump down to the 1 hour, doing the exact same thing. As you can see, EMAs, full trend, 800, 250, 21, 8. And you can see L50, which is this yellow line, is above the 50 value, long bias. I've got the daily, the 4 hour, and the 1 hour complementing my 15-minute trend. With ASFX, we have obviously a lot more parameters on the 15-minute we take into account when grading our setup. And if we'll even be involved in the setup, there are too many parameters that are against it and lower the probability of the outcome of the trade, then we'll simply mark it up as an ID and it's not worth our money. Higher time frames being the way they are, definitely can induce me to take a trade. Even if there is a few knocks, I'll just size down accordingly and just grade the trade appropriately. So I'm not going to hit it with full size if there are more knocks than I usually would trade on the 15-minute. So on the 15-minute, obviously we're looking for the exact same thing. We're looking on the daily, 4 hour, and the 1 hour. We've already done our analysis on the 15. That's how we gauge our watch list. So 15-minute, looking for perfect EMAs, perfect L50. We're also looking for the Asia range to be broken, which is this black box over here, if you can see that. That is one of our parameters. And as you can see, price has indeed broken above it and now it's pulled back. I'll be looking for long positions now. I'll be looking for our trade setup to present, and then I'll be taking advantage of it. But as you can see, price is moving up, complementing that higher time frame bias. I'll just let that play out. Gauging that higher time frame analysis, knowing that price is bullish on the daily, price is bullish on the 4 hour and the 1 hour, adding that confluence to your trading. When you see an idea present or a trade setup present, you're going to want to take advantage of it, because more likely than not, if all the other parameters are in your favor, price is going to go up, because it's just, you're looking at the daily, which is very significant in price. So we're back on the daily chart now. I just want to go over a few things that I take into consideration on the daily chart. As I was saying previously, I think I've said this a few times now, but obviously the daily chart has more data, 24 hours worth of price in one candle. When you can see price on the daily doing stuff like this, where it's testing a significant zone, such as over here. I'm not big on zones because they're very subjective, but when you see zones like this, you can obviously see that price is struggling to break above this certain level. It is something to take into account on your analysis. Now, I only kind of more or less draw zones like this on the daily and the 4 hour. I would kind of lean more towards the daily because, once again, they are more significant and I weigh it more into my analysis. But as you can see, I'll get closer here for you guys to see. Price rejected this level. It tried to come up here again and test that level again. You can see we tested it the third time over here. We tested it again over here. And the market is currently trading at that level. You look for certain price levels where price may store or find, in this case, resistance. What I like to do is round off those numbers to psychological numbers, which is, I don't know if anyone's heard of quarter theory. I'm not going to cover that too much, but it's every quarter. So if you're looking at price at 1,000, quarter theory would be 1,025, 1,050, 1,075, and 1,200. So every 25 increments. They are psychological numbers in the market, and the market reacts to that. A good example I use is whenever you go to fill up your car with fuel, you always try and aim for a round number. That's exactly what people do in the market as well. The market reacts to even handle numbers. What I would do in this case is I would put more weight and significance to, in this case, 1.3500. That's where I would have a zone or a line drawn. And if we can break above that, that would tell me that there's bullish momentum and we could break above that, that significant level. Jumping back down to my 15-minute time frame, my trading time frame, when we're doing our analysis, what I'll do is you can see that zone. I'll get rid of that zone, and now we'll have that 1.3500 level. Let's see how price reacts to that. So you can see that we come up. You can see that price tapped it, came back down, and rejected off it. That is more or less the only higher time frame in terms of zones and price levels I'll be looking at. I'm not just going to start drawing zones everywhere and anywhere, because you could spend all day trying to find significant levels, trends within trends, different type of structure shells in the market. There's always going to be some type of consolidation period, impulse moves, correction moves, where you can start drawing so many zones in between where the market kind of just bounces off. On the daily chart, that is why I prefer using the daily chart as finding these strong price levels where price has resisted or used as support. And if we can't break above them, I know that we could struggle breaking up above again if price is approaching that exact same price level. So that's more or less what I do on my daily time frame. Sometimes the 4 hour can give really clear zones as well, exactly like the daily, but I do favor the daily chart since of that it's more weighted and there's more price data in each candle. Another thing I'd like to just point out as well, just because we have that significant level at 1.3500, more times than not, support and resistance levels act as magnets. So you never know what's going to happen, but more likely than not, price will attract that significant price level, that 1.3500, price will get attracted to that level and hit it and then bounce off it. So it wouldn't, if just because I see that level and I'm like, oh, there's going to be a resistance in the market, because the high time frames are so long bias, if I can get a minimum of like 1.5 2R risk to reward to that resistance level, I'm gonna take the trade. So don't let zones like this stop you from getting involved in good trade setups. If you're taking the trade and you're taking it at 1.500 because you can see that momentum, that's something I would say, hey, don't do, because you know more likely than not price is gonna come off that level. What you wanna see is a break and retest of that level, that 1.3500 level, and then you can look at getting involved because price has broken above it. It's retesting it and holding that new level, so you might see a push off it. But never trade directly into it. Make sure you can get significant risk to reward to that resistance level, and all would be good in your trading. Just to quickly recap how we trade at ASFX and what I do daily, coming to my chart and doing this consistently. Start on the 15-minute to get your trend. Start on the 15-minute to find those perfect EMAs and that TDI in the correct zone that complement the EMAs. So if the EMAs are long bias, you'd want to find the TDI indicator with that liquid 50 above the 50 value. If the EMAs are short bias, you'll want to find that TDI, that liquid 50 yellow line below the 50 value. Jump up to the daily time frame and see if it complements the 15-minute. Go to the 4-hour, see if the 4-hour complements the daily. Go to the 1 hour, see if the 1 hour complements the 4-hour and daily. And then on the 15-minute, you've already got your trend, whether it's long bias or short bias. Add those confluences to your trading, and once your trade signal presents in the market, you'll be able to execute it with complete confidence. And just a quick tip, if you're on the daily time frame and you see price has struggled at a certain price point where it comes up, makes resistance, comes back down, tests it again, can't break above, mark those zones, because the daily is very significant with all that price data in there. So if price is struggling at that point, you know it is an area of resistance, and there's price sensitivity zone where you might see price react, wherever it breaks above and holds, false breakout, or just completely just melts when it touches it. So keep that in mind on the daily chart as well. I hope you guys got some value out of this video. Let me know if you want me to explain it a little bit differently, and let me know if you enjoyed this type of technical analysis type of videos. I plan on doing a lot more of these, so I'm trying to put it in a type of format where it's easy to explain and make sure everyone can understand it. Once again, guys, thank you so much for watching the video. I hope you guys have a great day wherever you are, and I'll see you in the next one.